welcome to this video. In this video we're going to be revisiting the Quickbooks CashFlow tool. My name is Johann Goree, I'm the Managing Director of the On Point Accounting Group, and as part of the On Point Accounting Group is JGBC Ltd. JGBC is an elite pro advisor partner of Quickbooks, and I am an advanced certified Quickbooks advisor, so we know Quickbooks inside and out. I've been using it for many years. If this video proves useful to you, we'd love you to be able to like it and to subscribe to our channel to be able to get future notifications on future topics we're covering. We do cover QuickBooks, but we also look at other softwares, and we talk about general changes to the business economy and the business world as a whole. About a year ago I did a video when the Quickbooks CashFlow first launched. I thought it would be really helpful to bring you up to date with all the latest features, the benefits of using it, and how we encourage our clients to use it in today's day-to-day business as a tool that they rely on. Now, before we get into the tool itself and understand the ins and outs of the cash flow tool that's within QuickBooks, the first question that I often get is, what is cash flow? Why is it important? And why should I be worried about it? As small businesses, all of our businesses thrive on the amount of cash that is or is not in the bank account. And as a business owner that's planning growth or planning for challenges ahead, we should all understand what our cash flow looks like in normal times, and then we can make plans for how to make sure the cash flow is impacted at a minimal level when we have challenges, or how we can increase our cash flow when we need to. So cash flow is basically your bank balance. Have I got enough money in my bank to cover all the money that's going to go out of my bank? Have I got enough sales coming in to cover all my wages, my VAT bill, my tax, my suppliers, my utilities, my rent? And if you haven't, then we need to fix that. We need to find out how we can get a positive cash flow rather than a negative cash flow, because that way your business is going to continue to be able to trade and to succeed. So what we've always discussed with cash flow as accounting firms is the importance of it. A lot of businesses and business coaches have been hung up on profits and equity in the business and stuff, but ultimately none of that matters unless you've got money in the bank to pay your bills. If you've not got money in the bank to pay the wages, you can't afford to have staff. If you've not got money in the bank to pay your suppliers, you've not got any materials to change into products. So ultimately, cash flow is king. And what we saw during COVID-19 was the softwares like QuickBooks have launched a built-in free cash flow tool that is more than sufficient to help you plan your cash flow, play with it, tweak it, work out what happens if you do this or do that, and have that insight on a daily basis in your business at no extra charge. Before COVID, there was some cash flow tools out there built into mainly reporting platforms. There was a few standalone ones, but they came at a charge, at a premium, and it very much had the feel of cash flow is important, but you could only get the in-depth understanding of your cash flow and the visibility of cash flow if you had the affordability for the tool that gives you all of that. So what we saw during COVID-19 though was QuickBooks, etc., they all really realised that cash flow is so important at this point for small businesses to help them survive, to help them plan. Can they afford the bounce back loan? Do they bring in staff? Can they afford not to pay furlough, etc.? So cash flow tools got released that were free of charge, built into QuickBooks, and it added a huge amount of value to the QuickBooks proposition. As I said, we looked at this when it first came out in its raw form. In the last 12 months it's had lots of tweaks, lots of new features built in, etc. A lot of it is focused around usability and customization. So I just wanted to take some time today to go through the latest version of the QuickBooks CashFlow tool that's built in free of charge to all of their QuickBooks online products that they have. So it doesn't matter whether you are on the Simple Start or the Pro version, you get access to the CashFlow tool, because QuickBooks understands, as accounting firms do, cash flow is important to every size of business, and it shouldn't be an insight that is determined by affordability. Okay, so let's get into the cash flow tool within QuickBooks and have a look at what's going on. First of all, we're just using a demo account today, so there'll be no sensitive data being shown. Because it's a demo account, we've actually wiped it, so there's no data in there whatsoever. So we're starting from scratch as if you're a new business, which is really good and helpful. So when you log into QuickBooks, you've got your Get Things Done screen and you've got Business Overview under your dashboard. The first thing to note about the CashFlow tool is on the Business Overview screen, you'll soon be, once you've got your bank accounts connected, you're going to have a graph up here showing you your cash flow on a daily basis. So that's a really helpful immediate insight into QuickBooks cash flow, so you can see exactly what's going on. As I say, the cash flow is linked to your bank accounts, so it has a constantly updated cash flow position, and it takes that into account and recalculates your future cash flow position based on the live bank account data you've got in there. So let's go into the cash flow tool and have a look at what it's all about. On the left hand side menu, it's very obvious where the cash flow tool is. It's written cash flow. It's nice and easy to find. So we'll click on that. As you can see, the cash flow planner is still in beta testing. It's extremely reliable and useful, even though it's still classed as a beta. QuickBooks keeps things in beta testing for quite a long time while they're focusing their efforts on making it even better. So this is it. We have got a graph at the top that's going to show us the ups and downs of our cash flow. We've got two types of graphs as well. We can see money in, money out, and this is going to be a bar chart, and we'll see this starting to populate once we put the information in. And then we've got the cash balance, which will show a line graph rather than a bar chart, and the line graph will be responding on a daily basis. The bar chart looks at ins and outs on a monthly basis. So if you want a summary for the month, and if you want to know whether you're going to be better off next month than you with higher income than you have got outgoings overall, then you want to have a look at your bar chart. If you want to see on a daily basis exactly where that cash position is projected to be, then use the cash balance. So remember, we've got a nice little warning here. So first big thing we've got is a nice blue warning telling us this is a safe place. The beauty of the cash flow tool within QuickBooks is that it is a safe place. So we tell all of our clients to go in and play with cash flow. They can do what they like. They can add, they can take away, they can trial ideas, etc. And it's safe from the point of view that it doesn't impact on any of the financial data or the accounting data anywhere else in QuickBooks. So it's very safe for you to go in and have a play without having any fears of it impacting anything that your accountant's doing or any of the work you've done on your books. So I'm just going to get rid of that warning because I've read it. After the graph, we've got the ins and outs. So this is where the data is going to be coming from. First thing it's asking us to do is link our bank account. In this scenario, we're not going to link a bank account because we haven't got a trial bank account, but it's the best first thing to do. So the reason they want you to link your bank account is because that way they can pull through your cash flow position, starting position at any day. So if we're connecting our bank on the 1st of June, for example, it will know the bank balance was this. So first step would be to link your bank account. The second step is to now give QuickBooks the information that you know is going to happen. Now QuickBooks will start to try and learn and guess and estimate what's going to be coming in and out. It will start to see reoccurring patterns in your bank balance, like for example Spotify at £9.99 comes out on the 15th of every month. QuickBooks will suggest this as a recommendation, which is really helpful. It speeds up the data entry process, but that requires some historic data in there to be working with, which we haven't got in this case. So we've got 3 tabs. We've got all, so this is all the ins and outs. Then we've got money in, and then we've got money out. So it's a bit easier to view everything. So we're going to go with money in. And what we're going to do is add a transaction. So you can add the transaction. You set a date. It's always looking forwards in advance. So we can call it sales. Let's say £1,000. Now, for this example, I'm going to say we get £1,000 worth of sales every week that I deposit into the bank using the card machine and cash on a Friday. So we're going to tell it it's money in, it's repeating. How often is it repeating? Well, we've said it's going to be weekly and it's going to be on a Friday. So unselect the Saturday, which it's selected for us, or the Sunday even. every 1 week there's going to be £1,000 going in on a Friday, and it doesn't end at all. Okay, so we'll save that. And automatically QuickBooks is now calculating and reviewing this. Another feature up here is that you can select timelines. So we can now look at 24 months. That's the bit that's in beta testing. As you can see, QuickBooks has now taken that £1,000 of sales and it's built it up because there's no outgoings at the moment, and it started from 0 because there's no bank balance in there to give it a starting point, so it assumes 0. Well, as soon as you put your first transaction in, it will say that some predictions may not be available beyond 3 months into the future, but you can add these. So this is just QuickBooks saying, look, we're doing our best. You add the actual data, we're predicting what we can, but because we haven't got any historic data in this, QuickBooks can't predict anything at the moment. When you look at your transactions, it's now entered all the data. It tells you that it's a sale. It tells you the amount. Because we're on the income tab, money in, we know it's income from sale. And it's telling you the type. So this is planned. And the other type you'll see is a blue icon which says that it's QuickBooks predicting it. So that might be because you've got reoccurring invoices. It might be because you've raised an invoice for £200 and QuickBooks knows it's due to be paid in 2 weeks' time. So QuickBooks will take all the data it can find and try and populate the cash flow for you. So we've got our sales in there. No business runs without costs. So let's put some costs in. So we'll add our transaction. We will go with the 31st of the month. We're going to say this is money out, and it's reoccurring. It's monthly, every month on the 31st, and it doesn't end, and we're going to call it rent, and we're going to say we pay £1,000 a month in rent. So we save that. Some months have fewer than 31 days. Yes, they do. So what they've done is they've said we will move everything to the last day of the month. Brilliant. Okay. What I'm just going to do is move that to 12 months. So because I've said to QuickBooks our first £1,000 comes into our bank account on the 5th of November, on the 12th of November, sorry, no, on the 5th. Now, because I've said to QuickBooks the first rent comes in on the 5th, because I've said to QuickBooks the first income comes in on the 5th of November and the first rent goes out on the 31st of October, it's telling me there's a problem. You've not got enough money in your bank, which is fine. Okay, thank you very much for letting me know. Then it shoots up here back to 0 because it knows on the 5th of November there's £1,000 going in. And then you can see it goes up, 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 and it's dropping down because it's taking into account the rent. So what we can now do is continue adding our transactions. So for example, we've got wages. We'll say they come out on the 7th of the month. Repeating is money out, so we've got to make sure we always change it from money in to money out. If it's repeating or if it's a one-off, so it's repeating. We've said it's on the 7th. It doesn't end, and we're going to say we pay £1,500 in wages. So now we're getting a few more lines, and then for every £1,000 we make a week, we're going to pay £250 a week in rent, in supply costs. So cost of sales, for example, money out, repeating from the first. So there we go. And what we can see is every time we make an adjustment, it's calculating it automatically and showing us the impact. So once you've put in all your costs here, I don't want to go through and add loads and loads. The next beauty of this system is you can now model other costs. So, our fridge is broken down, so I need to add So let's imagine we're on the 15th of the month. Oh, my fridge is broken down. I'm going to have money going out. It's a one-time item. Fridge replacement. And it's £2,500 for a brand new catering fridge. So we've now put that in. And that's suddenly brought everything into the red. Okay. So actually what we might need to do is organise for a loan. Say we organise a loan, £5,000 coming in, it's money in, one off, save. Right, we're now sorted. But actually, we've got to pay that loan back. So what we're going to say is we had the loan for 50 weeks, we're going to assume no interest, maybe a director's loan. Okay, so we've got a loan repayment, it's a repeating thing, it's money out, £100. The business is going to pay me back as the director because I've lent it the money. And it ends after 50 occurrences. Oh, now what I didn't do was say, oh, that should be weekly. I think I told it it's going to be monthly. So what I can do is drop down, change it to weekly. It's going to pay me on the Friday because that's when I do all my big deposits. I'm going to update the entire series. There we go, we've now got an up-to-date situation. So that's a one-off cost. I know I need to lend the money to the business to help keep us in the green. What about potentially looking at taking on a new staff member? Can I afford to add a part-time person to my wages? Well, let's have a look. New team member, we're going to say they're £500 a month. It's repeating, it's money out, it's monthly, and it happens on the 7th. And I'm going to say the starting date of this is in December because I know I get busier ready for Christmas. Okay, so we're going to save that. And now I can see, okay, it does impact my cash flow, but I can afford to take on a staff member with my current sales. But actually the benefit of bringing in a new staff member over the Christmas period and potentially for as long as possible is the benefit of increased sales. So maybe that new staff member generates an extra £200 a week for us. So we're going to say it's money coming in, it's repeating, it's monthly. Sorry, it's not, it's weekly. It comes in on a Friday. We're going to say it doesn't end because the cost of the employment doesn't end. We're going to save that. And there we go. We've adjusted again. So as you can see, QuickBooks CashFlow tool is absolutely fantastic. It's really nice and simple to use. You can add stuff in, you can take stuff out. You can go, actually, we're not going to have the rent anymore. So we can just click remove. It wants to know, do you want to remove the entire series or just this one payment? So it's really nice and easy to edit. You can add in loads of different bits for scenarios and you can see how everything compounds and changes and impacts on the business without causing you any hassle. The next beautiful part of this is you can export it as a PDF. So this is really helpful to go into business plans. When you go to a bank, you can show them this is the cash flow. Look, we've taken into account the money coming in, the loan repayments, it's all there, we can afford it. Okay. The other bits we can do is we can tell it to look at all these bits in QuickBooks or not to look at things. So at the moment it's looking to see if there's any estimates, any potential sales that we're looking at that we've quoted. If we don't want to take into account the estimates, we just want to take into account the actual work being done, which is invoiced, we just untick estimates. We can also set a threshold. So the threshold is like a safety barrier. A lot of small businesses will say, well, the safety barrier is 0. But some might say, you know what, I want to make sure I've got £1,000 in my bank account at all times. And you see the line for the threshold's gone up. Now in this case, we're not going to drop below that threshold, which is fantastic. But you can keep increasing your threshold as your business grows so that you've got a bigger and bigger safety net. And that's really helpful in case unexpected costs come up. So as you can see, a fantastic planning tool here, free of charge with all QuickBooks Online products. If you want to have a bit more insight into how to use this, If you want to discuss a few more specifics for your business, please do get in touch with us. We'd be more than happy to help you out with this. It's a great value add product to the QuickBooks Online offering. And if there's anything we can do, please do get in touch. We'd love to speak to you. Thank you very much.